Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, April 11th, 2023. Before I jump into all the charts, please click like if you would each and every time you watch the daily Tesla report and subscribe. It helps us out a great deal in being found on YouTube, and it helps you too. You get notified each and every time new content has been uploaded. That includes the daily Apple and the daily Tesla report. Let's take a look at the big picture, work our way into the day itself. The big picture, weekly bar chart. We're still in the confines of a long-term channel structure. As it turns out, this 229.39 channel top remains a big picture objective still. This is in part having tested channel support in early January when it was much higher than it is now in the low 60s, low 70s. On the way up, as you're well aware, if you've been watching the Tesla report for the last 3 or 4 months, you know that we had a buy signal when we settled above this band of channel, an intermediate channel that is presently in the 140s. Still anticipating 229.39. The question is whether it's going to be in the next few weeks or still over the next few months. That's obviously impossible to ascertain, but we can get a good idea of things. I will jump to the daily chart here. This extreme combination channel bottom and speed line, we settled right in it on Monday. And so, we opened below it. We held below it for much of the day, but as the late afternoon rally played out, we settled right in it. So it is sort of a no-go in terms of a possible 2 to 3 week sell signal back into the 140s. In fact, we can recover nicely from here. It doesn't look pretty, but the bottom line is if we don't settle below these line studies, these trend-defining line studies that are projected off the March low, I can't recommend playing the short side of this market as we move into later April. And in fact, this is still sort of a market to be long, to actually buy. So 184.28 is our pivot point for the day. It's our pivot point through the rest of the week, and it's also our pivot point through the rest of April. Because if we trade higher from here, and we certainly can, that 229.39 long-term target that I mentioned remains in reach over the next 3 to 5 weeks, which is more properly shown once again here. So that is sort of the bigger picture. Back to 184.28. Moving up from here, I've got 190.24 as our intraday resistance. That is nothing more than this long-term speed line. This is respectable in its own right. In fact, by one school of thought, we are in a sell signal, but I don't adhere to just one method. I like to sort of combine them together into a hybrid approach, which I've done for years. Nothing works 100%, and it really is the trend-defining structures here that I'm leaning on as our pivot point into later April, and we did not close below this area on Monday. We did close below the speed line, what was that, Wednesday of last week, and then you've got Thursday and you've got Monday, 190.24, respectable intraday resistance, but we can push through it. Keep in mind, we didn't close below this, and if we open above 184.28, we can quite easily test 190.24. And if we push through 190.24, 194.60 in reach today, and that is really the channel structures that you see here. So I will say that opening above 184.28 allows that level to be bought, and it will keep 194.60 in reach within the day. That is the day trade opportunity, I think. On the way up, of course, the 190.24 level will test your patience if you're long and anticipating 194.60 as an intraday objective, where you can see here we can top out for the day. Now, if we close above 194.60, good low for the week, and I would expect meaningful gains. I do have it illustrated here. This 216.08 former channel bottom is then expected by the end of next week if we close today above 194.60. You can see that here, that is realistic, a realistic outcome if we settle today above 194.60. So once again, closing above 194.60, good low for the week. The 3 to 5 day swing trade remains bullish. It is bullish now. It's by a thread, I'll grant you that, but there's really no way for me to see this, but still to the upside above 184.28, 194.60 in reach over the next, within the day. And this 216.08 formation over the next couple of weeks. And as I just mentioned, if we settle today above 194.60, then it's sort of get long or stay long to 216.08 by the end of next week, where we could top out perhaps on a weekly basis. And then we'd be very close to reaching that 229.39 long-term channel top, which, if tested over the coming weeks, can contain buying through the third quarter, and we can follow from here in a meaningful way. This is dropping gradually, and over the coming 3 or 4 weeks, it will actually match that high from early February. So that'll be interesting at that point in time. We'll talk a lot about that at that time. If you like the daily Tesla report, a wickedstocks.com membership delivers regular daily video analysis in both the SPY and the Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Do yourself a favor and check out our other content by clicking the link below. Let's cover the downside here today. There's really not much to add, but that if we break 184.28, or if we open today below 184.28, now we opened below 184.28 or this area of support on Monday without any aggressive downside follow through. And that can happen again. It really is a settlement based system that I use. Now you can pull up 5-minute and 30-minute bar charts and sort of dial things in with respect to your own methods in terms of whether you can expect aggressive declines today. If we open below 184.28, the emphasis remains on the defensive, and we could fall to 172.92 within the day, which is this low settlement price here on the daily chart following the February high. The lowest we closed was 172.98. That could be in reach today. We broke to 176.11 actually on Monday. And bottom line, if we settle today below 184.28, we have a 2 to 3 week sell signal to 146.06, which is a 5/8 Fibonacci from the January low against the February high. And that actually lines up still nicely, 146.06, with this band of longer term support on the daily chart that is presently between 142.70 and 151.10. So this area, essentially, this band of channel support, becomes a 2 to 3 week objective if we were to close today below 184.28. Until then, on a day-by-day, settlement-by-settlement basis, closing at or above 184.28, no good reason to exit a long position. If you've positioned yourself that way, anticipating the 220s over the coming weeks, you're still in the game with settlements at or above 184.28. And certainly if we close today above 194.60, I think you're going to have a more aggressive vertical move within 3 to 5 days of that. We could actually quite easily test this 216.08 former channel bottom. I think that pretty much rounds it out. Just a reminder, 184.28, our big pivot point. If we close above it, it's still stay long, be long into the 220s. If we close below it, it's get short, liquidate those 220 out of the money calls you may have purchased over the last few weeks, and reverse and buy, say, 145 or 150 out of the money puts that don't expire for at least several weeks, where I might add we can bottom out on a quarterly basis and from here turn higher again as we move into Q3. That is all I'm going to say for Tuesday's Tesla report. Please click like, subscribe. I'll be back tomorrow with Wednesdays. You have a great day.